Aloha, everyone. Welcome to the Lava Channel. This is Market Take Friday, July 21st, 2023. The FedNOW pay system is live. Welcome to it. Nobody will notice at first. Right now, they are just between the banks with their lightning payments, but now they're set up for whatever token it is that they will choose to use later on down the road. Some people think that this will be Ripple or XRP. I don't think it will be, but we'll see. This is not financial advice. So markets in general, we are experiencing the death spiral of the dollar. So the relative strength of the dollar, it is up a bit today. It kind of tanked yesterday. And today, I think it's going to, when that rally happened, as it increased a bit today, will put a little pressure on the revaluation or the reset eventually of what will be used for currency is being built on that FedNow system. And I think we're not going to know until later. So the larger banks are doing well and reporting good earnings. And they are on that FedNow system, but the regionals are still suffering. This is all, I believe, part of that plan. They are going to consolidate some of those smaller banks and buy them for pennies on the dollar. So, a summary of yesterday, we had our reverse call from the pandemic was Carvana. And that one began to play out with a halt of its epic rally. And I think there's more to come. Also, I need to add RVs to our reverse spin up list. There is a glut in inventory there as well. And after the pandemic, everybody was purchasing an RV so they could travel across the country. So now all of those slightly used RVs coming back on the market as people can't pay the bills or the loans any longer. So yesterday we did get our pullback as expected. So broad markets may continue to rally a bit early Friday with no significant news to stop it. Don't have a lot coming in. Volumes and pricing may drop a little bit later in the afternoon as typical before closing on Friday because traders are going to be clearing their plates and closing their options ahead of the weekend. So it's crazy market. And everybody knows the Fed will be back next week to continue their freak show before they raise the interest rates. So futures, as of right now, the Manorino market risk indicator is up again at 241 roughly, and it's rising. Get more risk coming into this market. Oil and crude are up on supply concerns. There's a couple of stories. The Russian oil exports to China hit a new all-time record. They're double what they were previous pandemic. And so now with all of the embargoes and trade issues, Russia is exporting. Its largest partner now is China. And then on the US front, they're suffering from more government intervention as oil and gas companies will have to pay more to drill on public lands under new Biden rule. Well, that's what's that going to do to the price? It's going to go up because they're going to pass that on. These oil companies are not going to be paying these bills, and we need to pay attention to that. So they are also, oil is up right now on news of the Saudi supply cuts. So back to the markets. The 10-year yield is hovering at approximately 3.85 as I'm doing this on that expected rate hike next week. Bitcoin and crypto is recovering, but Bitcoin is still below that 30,000 mark. And I would like to see it get above that and spend some time. And the more time it spends in consolidation will increase the move when it makes it, as well as the volume. So that's something that we'll be watching. On a macro, there's nothing on the Fed calendar today, no speakers. They are in their blackout period until next week with that press conference, and then they expected Wednesday. We'll see what they do. Monday, however, is manufacturing PMI. But as I said, I plan to clear many of my trades today that may be affected by that. So for now, I want to put in a short, shameless plug time. Quick note and reminder, if you like any of this content, please hit the like. Only takes a moment and it means much to me. I appreciate that. So now I would like to move into some what I call reality checks for the longer term. So yesterday we got our jobless claims down, dropped to a 2-month low of 228,000. Only 250,000 people lost their jobs, and they were expecting more. So they're saying the labor market is still going strong. We've got BNY Mellon's Alicia Levine, and she's not alone, saying that recession appears nowhere in sight. Her argument is the Biden administration is spending over $2 trillion and that it's flowing to the economy mostly through the industrial sector. So they're increasing their price targets because she thinks the earnings will go up in companies and points to strengthening healthcare and energy. The problem is those are typically defensive sectors when people are on risk off assets. She's also pointing to financials being strong, but she doesn't address the elephant in the room of debt. I mean, the debt market, as we know, is huge. And she's saying the financial sector is strong, but as I just said, it's a mixed bag. Bankruptcies and defaults are skyrocketing, and that will continue. So her argument of the 2 trillion will go to the companies in a lot of corrupt areas, but it's never going to make it to the pockets of the people. And the middle class will have to pay through inflation. So the problem is this money will not flow to the middle class, but the inflation will, forcing that two-tier society of the upper and lower tiers. And we're not supposed to believe the unhoused number of people, as homeless people, is increasing. And strikes are on the rise because this inflation is persisting. So we're not supposed to believe what we see is actually happening or the increase in crime, namely theft and looting. But rather, we're supposed to believe that the economy is okay and we're just doing wonderfully. So, as I said, even though the stock market might rise, our economy is not doing well. So, really, coupled with all of this, the national debt now eclipses our GDP in real numbers, and we'll be struggling to service our debt alone. So, in another story that is closer to reality, that tells the real story, is that there are a number of part-time workers that would like to be full-time, and this number has more than doubled. So real unemployment means that there's still the same number of jobs, but there's less hours worked. So employers are cutting hours in a bid to keep their employees at the ready, but they still need to cut their labor costs. They had a hard time hiring last year, and so many companies are trying not to lay them off and just cut back their hours so they spend less and ride out the recession that is coming. The problem is that if the numbers for the next report aren't good, they will usually decide on cutting their workforce. And when this happens, that turning point happens rapidly. The difference is, though, we will be prepared. And if you're not quite prepared, it's not too late to start. You're not alone. And with a good community, we will be outside of their system. So with that, I wish you all a green trading day or just a wonderful day in general. Another note, Greg will be back soon. I thank all of you for sticking with me, and I will be posting a separate video on CBDC, a little bit more on that, and on this FedNOW news, them rolling out, as well as a couple of other things in the news. We've got other trade agreements going on with countries and some other things that will affect us on time. My goal is to keep you updated on important information in short format so you can have a plan and then go about your day. I will continue to post these developments and real news, and so I'll see you soon. Remember your community. Love and care about each other and be charitable. We need each other more than ever. So until the next time, my friends, stay free.